Always an interesting meeting when OPEC meets, especially getting everybody on the same page to agree. But then in the last couple of months, in the last over a year now, we've seen them being able to agree to the output cuts. But now we hear that there's growing demand, and Russia and Saudi Arabia are angling for an increase. So 600,000 barrels increase per day is what is on the table, but Russia wants 1.5 million barrels per day increase. What are your thoughts? How is this going to play out?
These are interesting times. The oil market is at a place it hasn't been in quite some time, where demand outstrips supply. Russia demanding for an increase of 1.5 million barrels a day is just, in my opinion, it's not happening. I mean, where's it going to come from? The output losses in Libya, Venezuela, and possibly even Angola, and Nigeria has obviously some production issues. I think the amount of about 600,000 barrels a day. I mean, the outputs, the agreement was for 1.8. They achieved that. They exceeded that due to
we saw oil prices hit 80. I mean, briefly $80, but high.
And what I foresee is a lack of consensus at the meeting on Friday, which will push oil prices probably back to about 80 or thereabouts. But if in a scenario where they have some consensus, oil prices may fall. I mean, the fact that you have prices about just over 70 and the oil market being tight and demand outstripping supply, it leaves the oil market susceptible to any price shock. Any geopolitical risk could escalate and prices could spiral. So I foresee a lack of consensus.
But do you think that everybody, because at this point, if this is a main agenda for the cartel, it would mean that everybody agrees that there needs to be an increase because of sort of pent-up demand, which is, I mean, the impression that we're getting right now. So I'm just wondering, is decision has to be reached, or do you think that this is going to be postponed? I
think it could be postponed. For the time being, obviously, there's everyone has Iran at the back of their minds. That the U.S. sanction on Iran.
I mean, it would appear that there's still enough geopolitical tensions to keep oil prices where they are right now at around $4 per barrel.
You don't want to raise output because you have the relatively poor OPEC countries, and you have the Saudis, who used to be swing producers, who, to an extent, in the past, where other countries, and this sort of thing happened in the past, the Saudi would have swung and increased production to maintain that price. That doesn't happen any longer. The poorer OPEC members would prefer the prices stayed where they are and went up a bit, but not high enough to incentivize shale production from the U.S.
We'll talk about the shale guys for a moment, but back to Russia. Russia, I mean, it took a while for the cartel to get Russia on the table, Russia being a key member, a non-OPEC, but key producer. And I'm thinking, because of that sort of special status that Russia has, and I know that when Russia speaks, the cartel does listen, because, I mean, they remember what it took them to get Russia on the table. So I'm thinking, what if Russia insists or tries to go for a middle ground, maybe not 1.5, meet us halfway, or maybe somewhere around 1 million barrels per day? Can Russia insist? Can Russia hold the cartel to ransom?
Russia would obviously, Russia has been one of the beneficiaries of oil prices rebounding. I mean, they came together, you could call it a gang up if you will, came together and they pushed oil prices back up. A middle ground somewhere about, I mean, if the shortfall is 600,000 barrels and you're asking for 1.5, I mean, a middle ground, where would that middle ground be? I mean, the poorer OPEC countries,
700.
The poorer OPEC countries would be looking to, hey, look, give us 50,000 barrels here, 100,000 barrels here. We need this more than you do. So, I mean, sitting down at the table and, I mean, making Russia see that, look, you are one of the biggest beneficiaries of this. It's also interesting to know that when this deal this deal to curb output was formulated, the exit plan was where analysts were saying, okay, look, how does an exit plan play out? No one foresaw that Libya, Venezuela, even Angola, and even Nigeria would have problems. So that, I mean, imagine if these countries didn't have problems, didn't have that, caused that 600,000 barrel shortfall, we would, I mean, the scenario would be different. And obviously, they'd be looking in the future, in the next 6 to 12 months, to push up back up. So when that happens, if Russia is giving, say, that middle ground 700, will it agree to cut output? Then again, so that's an issue that...
So two scenarios are on the table now. One, they agree, reach some kind of middle ground, agreement. Two, they don't agree at all. How is the market going to react to both scenarios?
Well, a lack of consensus would push oil prices up.
Okay.
If they agree.
You think the cartel knows that?
Yes.
They know that?
I think.
So it works in their favor if they don't agree?
I think the smaller OPEC countries would not, I think they would, even if a middle ground is reached, they, okay, push output by 700,000 barrels, they would insist on them having a significant proportion of that 700,000 barrels. So Russia would be left with, say, 300,000.
Doesn't sound like a democracy to me, but so of course the cartel has always been like that.
That could play out to, that remains uncertain.
Okay, let's talk about the shale guys. I mean, while all of this has been happening, I mean, the shale, we did see a rise in U.S. inventories a couple of weeks ago. I mean, it's been up and down here and there, but I'm just thinking for the shale guys, how are they being factored into this scenario? Okay,
at the moment, the WTI is trading at a spread of about $10 below the Brent. That's, to put that in perspective, last year it was an average of $3. But from May till now, it was about $5 in May. It's about $9, $10 now. So some of the demand in the market is switching to the WTI crude, which is
West Texas
which is U.S. shale. The Nigeria has been having some issues selling its oil. Some refiners are, because our Bonny Light is priced discounted at about $8.65 below Brent. So everyone's shifting. There's like a shift to the U.S. And that's one of the things that pushing Brent up, causing some divergence between WTI and Brent. But if the shale guys continue to pump oil, that could play out where the market is sat. There's a glut of WTI in the market, and that would push WTI prices down even further, causing more demand. And it plays out where there's more demand and pushes it back up, and the spread closes.
All right.